It's your guy Manny again with another edition of an earnings review. Today I want to look at Google. Google released earnings, I believe, yesterday, and a lot happened since then in the general technology space. So I want to take a look at that with you. As you know, I'll go through the earnings report, the financial statements, a look at the fundamental analysis on my side, a look at the technical analysis, and here's another addition from the last one that I did on Netflix. I'll come up with a Manny score. So it'll be a good takeaway on an overall recommendation of the stock. Now, a bit about me again. I'm a growth focused retail investor, and I enjoy doing stuff like this. I enjoy educating the community, I enjoy learning from the community, engaging and forming a network. So, I really do appreciate your help and support. Please do subscribe to the channel if you like this content. Your appreciation of my content is basically fuel for any additional content. So, with that, let's take a look at Google. Company first. So, what does Google do? Alphabet has these are the types of businesses they have. So, number one, Google's the main search engine that's used across the globe. Google.com is used by many people. They have their own YouTube where this video is being shot. Again, like, share, and subscribe. They have this thing called Google Network. That's a bunch of other businesses. And together, all that is part of Google advertising. Then they have subscription platforms and devices. That gets to you to Google services. And then they have the cloud services offering, which competes with AWS, Microsoft Azure. Basically, those are the hyperscalers of the world. That's Google Cloud. Then they have this thing called other bets. Other bets are things like Waymo, things of that nature. Let's get on to the next topic, guys. Let's look at the actual earnings report and then move on to the next things. So I'll see you at the next video. Straight off the bat, Google's revenues came in at 84.7, which grew at 14% year on year. Operating income expanded. So on both counts, year on year has accelerated since the last year, and and that's a great story. I think on an overall perspective, diluted EPS 1.89 versus 1.44 in Q2 of 2023. I'm just going to put it into a little bit of a perspective because those may seem as just numbers. We don't really know at a business unit if it's good or bad. But I have this little report that I track on a quarterly basis. I go into not only what Google does on an overall basis, but from a business unit standpoint as well. So Google, this is advertising. So all in search, YouTube, and network. That grew at 11% year on year versus 13% year on year in Q1 of 2024. Now, some may say that that's a little bit of a deceleration. I'm just looking at Q4 2023 that grew at 11%, and that's supposedly one of the bigger quarters in for Google. Um, and Q3 of 2023, from a year-on-year perspective, grew at 9%. So to me, this is actually a good result if I put it into perspective of last year. Platforms and devices, this is things like Pixel and things of that nature that grew at 14% versus 18%. Um, I'd say, okay, this is a little bit of a low light for them, given that that was growing at 23% and 21%. With the Gemini or Gemini, as some would say, um, providing impetus into refreshes for hardware, this may be a little bit of an item where they would see an uptick in the future quarters or the years. Google Cloud grew at 29%, plus 1% year on year from Q1 of 28%. If I look at last year, this is also a bit of a highlight for me. 29% is a great clip. Other bets is really not that much of a, we don't need to look at the year on years there. Um, so we're going to skip over that. From an operating income perspective, uh, 32% versus 32.3% versus 31.6% last year. Last quarter. Um, that's the kind of breakout on the income statement side. Let's go onwards to the balance sheet and the cash flow in the following video. Really want to understand how much cash flow they're converting from revenue, what their key free cash flow forecast also is then. or how you can inform their free cash flow forecast. So their operating cash flow, which is the first thing you want to figure out in their free cash flow number, is was $26.6 billion, which was a decline from $28.6 billion. Now, moving on to sort of getting to free cash flow, what their capital expenditures are going to be like, and it looks like purchases of plant and equipment between the quart between the years actually went up double. And that to me is the big story here. $13 billion of capex is a big number. And as we look at the future reports that they have on their website, we'll want to look at additional color to understand what that capex number is driven by and what the future is going to look like. So let's get into that part in the next section. Before we go there, let's quickly look at their balance sheet, which is somewhere over here. Okay, here it is. So I mean, from a debt standpoint, really the debt is really flat. And I look at long-term debt is at $13.2 billion, and if I like look at their equity, it's at $79 billion. So from a debt equity ratio, there is really no issue within Google, and that's why it's one of the Mag Sevens is one of the reasons why it's a blue chip stock, like they say, something you want to have in your portfolio. And then from a the other um, sort of ratio I look at current assets versus current liabilities. So do they have enough liquid cash, immediate cash to extinguish their immediate liabilities? And yes, they do. 161 or 77 is more than a healthy number. So their balance sheet is a very robust balance sheet. Well, let's not spend any more time on this. Let's move on to the next section, which is the fundamental analysis for the stock. So what I have over here is my own worksheet, like you've seen in the Netflix video. If I benchmark this number here, which is the 63% share of total advertising all across the globe, and I look at the forecast that's coming from the same research website, which grows at 7.7% on a year-on-year basis, I'd say I'd be comfortable assuming a little bit of an uptick for Google going into the end of 2029. Um, just because it is the most dominant website, there are more tailwinds than headwinds. One of the piece of news that I read recently was that Reddit's answers or content is only going to be directly searchable within Google. I think the only headwind really that the search market has for Google is, from my perspective, is China and Baidu and players over there. But that's why I think that the US still dominates ad spend, and therefore I'm comfortable making that assumption. Now, if I look at social media advertising, which is YouTube not number one. YouTube is probably number one, number two, or number three, and also their share has stayed flat. So I'm going to assume a little bit of an uptick, just given the fact that again in the United States, um, TikTok is I don't see that as being unbanned. On platforms and devices, not assuming any growth there. I'm just assuming 5% flat. Also on the Google Cloud side, um, I may be proven wrong over here. I think there is a little bit of an upside over here, but I think more's to be seen in this area. You know, on gross profit margin, Google's definitely expanded margins. Google's also reduced their operating expenses. So I'm making an assumption there that Google will continue to be more efficient in the business. On the capital expenditure side, we saw in the earlier section that Q2 came in at $13 billion, which was up from even Q1 of 2024. Q1 2024 was at, minimize this now. So Q1 2024 was at $12 billion, but this was double of last year, 6.8 I think it was to $13 billion. If I quickly go into Ruth's commentary, Ruth is the outgoing CFO, which is so from the earnings report standpoint, she has indicated somewhere over here, with respect to capex, second quarter was $13 billion, once again driven overwhelmingly, blah blah blah. Looking ahead, we continue to expect capex throughout the year to be roughly at or above Q1 capex of 13 to 12 billion. That's our answer, guys. $50 billion should be our estimate for full year of 2024. Other thing that I'd take away from this report is who is benefiting from these capex investments. So Nvidia is clearly the beneficiary. It's no surprise. When I do a section on or a video on Meta, we'll look at some of the beneficiaries of those capex investments. But that's basically the synopsis. Based on these conservative assumptions and based on Google's cost of capital, this stock is worth $165. I'd say the high end of this is an average WACC assumption or weighted average cost of capital assumption that the street makes, which is 8%. That's 245. So that's the range, guys. The fundamental value of this stock is between 165 to 245. From a fib retracement standpoint, it's below the 78.6, so it could well go and breach the 164. So the 50 DMA is looking like if this continues, it's probably going to go for a golden cross. A lot of people in this world that I know trade on RSI solely. Don't know if they're successful completely or not, but it's at a very low number, and it's approaching what they say as an oversold territory. I think I would say it's already oversold. But that's on the technical analysis standpoint. I'll see you in the next video. Almost. This is the last section. In this, I'm going to give the stock a Manny score. In the fact that the majority of the revenues come from the search side, followed by YouTube and in now cloud and other things and Waymo and in the stuff like in big bets and stuff like that. But the main part of their business is still very much industry leading. Um, Given the fact that I'm not the most generous bloke in the world, I'm gonna give it a 4 out of 5. So 4 out of 5. I hate when it write indents. So 4. Industry outlook. I think the outlook for this is absolutely rosy. Search is not going anywhere, or digitization of the world, so to speak, is not going anywhere. People are going more and more into social media. I mean, look at this. Um, so, businesses are using this as an avenue. I know I read somewhere that the cost per click in advertising has gone up year over year, quarter over quarter as well. So I'm going to give it another 4. On the fundamental analysis side, um, I w- I'd love to give this a 4 or 5, but let's just say 4.5, just because this stock is well below, is at the fundamental value right now, at their own weighted average cost of capital, and if I change it the street cost of capital, it's very much undervalued. It's trading at a big discount, and from a ratio perspective as well, it's cheaper than anything that we saw in their own sector or on from the Max 7 bunch. From a technical analysis side, I'm going to give it a solid 2. Just given the fact that, given the stocks over here, the stock could go back to 164, it could fall down. So from a near-term standpoint, I'd wait to see what happens, and also say that there's more headwinds in what Meta says in the upcoming release. But I'd say definitely hedge your bets. Don't lose out on the opportunity. But 2, and then company outlook. I think company outlook could be seen many different ways. They've been very transparent in the fact that the capex outlook is $50 billion, and I think that's significantly other higher than any other year that they've spent in terms of capital expenditures. So I think, given the fact we have all this in there in the calculation already, I'm going to give this a solid 4 again, for a weighted average calculation of 19 over 25, or an average calculation of 19 over 25. So overall, do I think this is a company you should add to your portfolio? 100%. 74% is a good score on an overall basis. But that's it, guys. That's my recommendation on Google. I hope you all enjoyed the video. If you did, please give it a like, a thumbs up, and definitely subscribe to the channel. There's a lot more content that I have planned and like I said, your appreciation is my fuel for content. So that's it from me, Manny. See you in the next video, guys. Have a good one.